All right, today we're tackling a pretty wild financial mystery. It all starts in 2025 with this really strange pattern that brought a ghost from the stock market's past, roaring back into the headlines. So here's the deal. The whole puzzle really kicked off when investigators at SEBI, that's India's market regulator, they noticed something was off. You have this American investment giant, Tiger Global, making these huge trades. But every single time, a small group of Indian traders were making the exact same moves just seconds before them. I mean, this wasn't just good luck. It was like there was a ghost in the machine predicting their every move. And this is how they pulled it off. It was a classic front-running scheme, textbook stuff really. So you've got an insider in Singapore leaking Tiger Global's top-secret trading plans. That tip shoots over to a mastermind in Mumbai. This guy then tells his whole network, hey, buy the stock, right now. Then boom, Tiger Global makes its massive purchase. The price shoots up, and the network sells everything off. They just cash in on the difference. So simple, totally illegal, and yeah, insanely profitable. So you've got to be wondering, who was this mastermind? The guy pulling all the strings, using a bunch of different phones with code names like Jack and Boss. Well, get this. It was none other than Ketan Parekh. Yeah, that Ketan Parekh. The man behind the huge 2001 market crash. A guy who was supposed to be banned from trading altogether. So how on earth did he come back? I mean, really, to get that, we have to go back. We gotta rewind the clock and figure out who this guy even was and how he became known as the market's new big bull. You know, Parekh wasn't some random guy who got lucky. He was practically born into the stock market. His family were all brokers. He was a chartered accountant, super smart, and he even learned from the OG big bull himself, Harshad Mehta. But the real light bulb moment for him? That came during the 1998 market crash. He had this huge realization. Forget the little guy, the retail investor. The real power, the money that actually moves markets, belongs to the big institutional investors, the giant funds, the corporations. He figured if you can get them on your side, well, you basically control the entire market. And that one idea, that became the core of his whole playbook. It's how he rigged the market leading up to the 2001 crash, with a strategy that got so famous they named it after him, the K10 stocks. Okay, so his main tool of the trade was something called circular trading. And what's wild is how simple it is. Just picture a few buddies buying and selling the same stock to each other, over and over again. To everyone else looking at the market, it looks like that stock is on fire. It creates this massive, totally fake illusion of demand and hype. And he weaponized this idea into a seriously effective three-step plan. Step 1, he picks his targets, the K10 stocks, all in the hot new age sectors like IT, media, and telecom. Step 2, he unleashes his network to do that circular trading we just talked about, creating a massive artificial frenzy and pumping up the price. Then, for the grand finale, step 3, once the hype is through the roof, those big institutional investors, the ones he was always after, they finally jump in. They see what looks like a rocket ship to the moon, and they don't want to miss out. Their money pours in, making the whole thing look legit and sending the stock price into another galaxy. And the results? I mean, they were just insane. Just look at these numbers. HFCL went from 40 rupees a share to over 2,500. Global Telesystems jumped from 80 to more than 3,500. We're not talking about good returns here. This was straight-up market manipulation on a scale that's hard to even wrap your head around. Okay, but wait a second. To pull something like this off, you need money, a lot of money. So the big question is, where in the world was Ketan Parekh getting all this cash? Well, the answer came down to two banks that were in on the scheme. First, you had Madhavpura Cooperative Bank. They were basically handing him guaranteed checks or pay orders, using his ridiculously inflated stocks as collateral, with pretty much zero oversight. At the same time, Global Trust Bank was giving him loans way, way bigger than the rules allowed. And why would they do that? Simple. Parekh was pumping up their stock price too. It was this perfect, completely illegal circle of you scratch my back, I'll scratch yours. But look, any scheme built on fake hype and dirty money, it's just a house of cards, right? It's bound to fall. And by early 2001, the winds started picking up. That bubble was about to pop and pop big. Now, to really get how it all fell apart, you need to know about short selling. Think of it like this. It's basically betting that a stock is going to fail. A trader borrows shares, sells them right away, and then waits for the price to crash. Once it does, they buy the shares back for cheap, return them to the lender, and pocket the difference. It was the absolute perfect weapon to take down Parekh's ridiculously overpriced stocks. And when the collapse came, it happened fast. I mean, Blink and you'll miss it fast. First, the global dot-com bubble burst, which put a ton of pressure on his tech stocks. Then, the union budget was a dud, and that spooked the whole market. That was the opening a rival group of brokers. They called themselves the Bear Cartel, we're waiting for. They launched a massive short-selling attack on his stocks. A week later, his money supply, Madhapur Bank, went bust. Just like that, his funding was gone. By the end of the month, the whole thing had imploded, and Ketan Parekh was arrested. But here's the thing. His arrest wasn't the end of the story. Not even close. In fact, this is where the whole thing takes a turn, from a story about financial fraud to a story about alleged political payoffs and a very, very controversial escape from any real justice. And this is the question that's on everyone's mind, right? This scam torched thousands of crores in the market. It bankrupted a bank. So how did the guy at the very center of it all basically walk away without any serious jail time? Well, a 2005 report from the Gujarat CID dropped an absolute bombshell of an allegation. Here's what it said. Apparently, Parekh wasn't meeting his bail conditions, so Madhapur Bank, the bank he ruined, filed to have his bail revoked. But then, out of nowhere, the bank just dropped it. They withdrew the petition. And the CID report alleged that this happened because of a bribe of 2.5 crore rupees. And here's the most explosive part of that report. It specifically alleged that the bribe went to Amit Shah, who was a director of the bank back then. The officer who wrote that report, a guy named Kuldeep Sharma, he pushed for a full CBI investigation into this. But according to the sources for this story, the state government never acted on the report. And what happened to Officer Sharma? Well, he was transferred, and then suddenly found himself facing investigations into old, unrelated cases. So, what was the end result of all this? Well, you can see it right here. Instead of getting hit with a huge conviction for the 2001 scam, Parekh just got this patchwork of penalties over the next 20 years. A 14-year ban from the market, okay, 1 year in jail, but that was for a totally different case from 1992, and then a few years for not paying a fine. I mean, for one of the biggest financial scams in the country's history, it just doesn't seem to add up, does it? And that brings us all the way back to where we started. Back to 2025. Because as it turns out, the game wasn't over. Not by a long shot. The ghost of the stock market was about to make a comeback. Remember that 14-year market ban he got back in 2003? Well, bans have end dates, and his expired in 2017. And so, really quietly, with none of the fanfare from his big bull days, Ketan Parekh was officially allowed to trade again. And it looks like he got right back to his old tricks. SEBI alleges that the new front-running scheme, the one that got him caught in 2025, had already raked in over 66 crore rupees in illegal profits for him and his crew. As soon as SEBI figured this out, they acted immediately. In January 2025, they slammed the door shut on him once again. Another ban from the securities market. So the ghost, for now at least, has been caught. But the whole story, it just leaves you with this one big question, doesn't it? This guy was caught red-handed, not once, but twice, decades apart, playing the same kinds of games. It really makes you wonder about the market itself. In this massive game of bulls and bears, where fortunes are made and lost in a heartbeat, can it ever be a truly fair game for everybody?